Hello, everyone. This is Arlene Garza with Reap Equity. Glad to have all of you join us today to learn more about submarkets and how important submarkets play into what we buy. And so we're today in particular going to discuss two submarkets or two areas that we currently own properties in, why we selected them, and why we believe these are hot markets for us to be investing in today. So thank you for joining us. Today, I have our Vice President of Acquisitions, Development, and Asset Management, Tim Ellis, who just Monday, had his 5-year anniversary with REAP. So in that period of time, Tim, tell us about yourself, your background, and then how many assets have you bought? What are the millions of dollars that you've helped REAP buy?
Thank you. Yeah, I'm proud to say I've been here 5 years, and it's been such an incredible time. We've worked on plenty of opportunities together, whether they're refinances, sales, purchases, across now 3 great metros: San Antonio, Houston, Austin. I'm a born and raised San Antonian. I've lived in Texas my entire life, lived in San Antonio my entire life. Know these markets very well. I've been doing multifamily and other commercial real estate analytics for almost 10 years now. So
Wow.
it's great.
Well, that's awesome. You know, Jacob and I, as you know, Tim, started investing in 2012. So a little more background. We started in San Antonio. We bought our first property that was a 24-unit property and decided to run it ourselves. Some people may think that's crazy, but it was something we wanted to do because it taught us what you need to know about how a property runs and how it makes money. So fast forward to today, we've purchased 33 assets. We've sold 10, bought, managed, and sold 10 at an awesome 2.13x return for investors. And so we feel like we've earned our stripes in this industry in terms of knowing the good, the bad, and the positive. I won't use the other word about investing in multifamily. So without further ado, let's dive into some data we want to share with you about how we select markets and submarkets. So let's start by looking at the 2 markets in the Texas Triangle that we have selected as prime markets for ourselves. So we'll go back.
Hey, go ahead.
Yeah, we'll go back. There we go. Thank you, Vanessa. Vanessa's helping us on the technical side. It keeps me out of trouble because I'm not that great at tech. But anyway, so let's talk about the Texas Triangle. Now, this is the mini version of the Texas Triangle because if you take the expanded version, it will take you up to Dallas, Fort Worth, down to Houston, over to San Antonio, and up. So right now we have had great experience in the mini Texas Triangle, and it holds really 68% of the state's 30.3 million residents, with a population growth of 4% from 2020 to 2023. So as I mentioned, we started in San Antonio and we built a base of properties. We wanted to do that before we moved into the next market, which was Houston. Our first acquisition in Houston was in 2019. And then last year was our first year to buy an Austin property. So why did we pick these markets? Well, Austin, let's start with that one. For the 12th consecutive year, the Austin Round Rock Georgetown Metro is the fastest growing region in the country. I'm sure you've seen the headlines. I'm sure you know about Elon Musk and all that he's brought into the Austin area. And in fact, yesterday there was an announcement that he's completely leaving California and he's bringing in his SpaceX program to Texas. So that will mean even more jobs. And Austin is considered one of the biggest tech areas, probably only to Silicon Valley today, and still growing. So 5.6 billion has been invested in startups in the Austin area. So that creates a real diverse workforce and it's appealing for many people. And that's what keeps driving people to Austin. And interesting for us, we know that of the households in Austin, more than half, 55% of them rent. So that makes owning multifamily in Austin a very attractive thing. Let's move to Houston. So it's the fourth largest city in the United States. Average household income of 90,000. That's great. And it maintains an unemployment rate of 3.9%. So notably below what the national average unemployment is. I know we've all been watching employment numbers and all the employment reports because we're hoping that will convince the Fed to drop our rates. So anyway, but we like unemployment to be low in these markets because it just means more people have jobs and therefore they can afford the rents that we will have. Only New York City has more Fortune 500 headquarters than Houston. So again, what that means is lots and lots of jobs. In Houston, 58% of the households rent. So even a higher percentage than Austin rent in Houston. And when you're looking at a population of over 7 million people and growing, that percentage really is a big number when you look at that. So we start by looking at the cities. We pick the cities that we want to really focus on, and then we zoom in on the submarkets. And really a submarket is the area around that property. All the CoStar and the data gatherers, they've put them into certain submarkets. And so we can gather information about each submarket that the actual property is in that we're looking to buy, and we analyze those. So I want to have Tim talk a little bit about what is it exactly that we're looking for when we're dialing into these specific submarkets.
Sure. Thanks, Arlene. Thanks for covering the great markets such as Austin and Houston. Love that we're there and love that we're growing more properties there. So yeah, so what we look for once we get into these submarkets, the first couple things we look at is you want to make sure that the submarket supports strong historical occupancy, meaning that that on average there's a good amount of occupied units and not a lot of vacancy, because if there's lots of vacancies, there might be issues pushing for rents. Okay, so that leads us to the next one, which is rent growth. You want your submarket to have healthy rent growth fundamentals in the past, call it 5-6 years, and then projected to have good rent growth going forward. You also want to see population growth. That's obviously very important because as there's more population growth, there's more demand for the housing stock that exists, which creates lower vacancy and higher rent growth.
So Tim, you're really talking with those three things about supply demand.
Correct.
So if you've got more demand than supply, which means population's moving in, population growth is nice. Your occupancies are higher. So there's more people trying to get into the units that are there. You're allowed to achieve a higher rent growth when you've got more demand than you have supply. So that is a lot of the reason I know you guys are looking into those numbers very, very specifically.
Yep, that's exactly right. Those factors help, with the natural or what we call organic rent growth, which is just the market demanding more and more competition for the units from the tenant perspective. So another thing that's super important is the absorption and delivery. So what does that mean? That basically means how many new conventional multifamily market rate products are being delivered within that submarket, and then that's the deliveries aspect. And how is it being absorbed? So an example, 1,000 units gets delivered. If in a quarter only 200 of those units get absorbed, otherwise moved into or occupied, that's pretty alarming there's not a lot of demand for multifamily in that submarket in that given time. But if it's the opposite, say 1,000 units were delivered and 1,000 units were absorbed, that means that there's a ton of demand for housing and multifamily in that area.
And I want to talk a little bit about that, Tim, some more, because we've all seen the headlines of all the new construction in Austin in particular. Houston and Dallas have also experienced the same thing. San Antonio to a lesser degree. And in the beginning, everybody was like, wow, they built, hundreds of thousands of units. What's going to happen overall? When I think it's important to remember that across the US, we're about 4.6 million units undersupplied, meaning there is still this need. So these developers are looking at the markets that are the strongest to build these units. However, it does impact us when you get down to the submarket level, because you want to make sure that we are not coming out with a new property we're buying and they just delivered 3,000 units, because that means for a period of time, they're going to offer some discounts. Those builders will offer discounts to get people to move into their units, and they'll compete a little bit more with us. Not completely, because what's being built are Class A's.
Right.
We buy typically Class B's, so the rents are lower. So, but it is still very, very important for us to look at when we're buying.
Right. And yeah, that's a great point. We like to look at the percentage of what is being delivered compared to the current existing stock in that submarket, right? So, if for example, at any given time, 30% of units in that submarket are new deliveries at any given time, that signals there's going to be a lot of there could be a lot of concessions or competition for that tenant ultimately, and which could put some downward pressure on rent growth or concessions or vacancy, right? So
Yeah, you're exactly right.
So that's an aspect that we like to study. Like you said, for the most part, we can be insulated with Class B properties from the new Class A's that are being built and delivered. But it certainly is a metric to study as we look at submarkets, and these aspects change, and we have to be on top of them when we're analyzing properties. So the next one is jobs and employment drivers. I mean, usually the rooftops will follow where there's a lot of employment or jobs in an area. So it's important to know, which way is that trend going? Are there a lot more companies or headquarters or jobs opening up in that area? Are there a lot of stable employment opportunities in that submarket or near that submarket? And so that's an important aspect to study. And you just saw on the previous slide, Austin and Houston just continue to attract employers and have great employment fundamentals.
Definitely. With the other thing we look at is the diversity of that employment. And I will say that, for years, when you talk to somebody about, for example, Houston, they immediately think, oh, well, they're all energy jobs and they're affected by what happens in the energy industry. And so we did our homework before we went to Houston and continue to do our homework. Only about 9% of the jobs are technically tied to energy. And the rest are those other Fortune 500 companies that we know have moved to the Houston area. And of course, Austin is known for high-tech jobs. And so that also is important things that we look at.
Yep. Another aspect is location and accessibility. So basically, some markets are the puzzle pieces of the greater metro or the greater city. So where is that submarket in relation to the whole city, to its downtown, to its airport, to its to the thoroughfares? And then again, the accessibility. What highways or what major thoroughfares are there in that submarket or coming out or to that submarket, or is there rail systems or whatever it is, right? That's important to
Or
study.
bus systems, the large metros all have those bus systems. And I know in Houston, it tends to be probably a bigger deal, but even Austin, people like to hop into a bus versus having to find parking, and especially if they work downtown. So
That's right.
location and accessibility is a key part of people moving around the city.
Yep. And another big one is your average household income in that submarket, right? And you can dial that down to a 1, 3, 5, 10-mile radius of a property, but in general, you want to see not just a solid average household income to support where you're underwriting your rents to, but you want to make sure that that it has been growing and that it's projected to grow going forward, because that is an item you want to keep an eye on. Another one is your quality of schools and then your proximity to the schools. So, what is the school system that is generally being served, or the tenants are being served in that submarket? How are they rating? What are those schools rating? Are they new schools? Are they old schools? Do they just get built? Are they going to get torn down or repurposed? So it's pretty important to study the quality of the schools and the ratings. And luckily, there's a lot of websites that and free tools for you to really hone in on all those attributes. And the next thing is where are those schools located in relation in the submarket in relation to the property? Are they on the other side of the highway? Are they tucked inside a nice neighborhood? Right. So that's important. And then another thing is you want to make sure that there are ample live, work, play attributes. So what does that mean? Basically, in that submarket, in that general area, is there a good park? Are there a lot of good parks, a lot of good park systems? Are there good recreational activities? Is there a mall? Is there a lot of retail where you have your big box retailers and nice restaurants and places for people to go outside of home and work? So that's important because people typically want to live close to where they work and close to where their kids are going to school, but they also want to live close to things they like to go to, like go to Target or go to
Sure.
your favorite stores. So that's important to
Yeah, and I
study.
think one of the things that seems to be becoming increasingly important are hike and bike trail systems. That is one of those where I know we're not talking about San Antonio, but it was ranked like number 9 for our hike and bike trail system. So when we look at these things, we factor all that into where will these residents hang out? What will they do? Will this bring them to this area because they have access to these live, work, play opportunities? And we've seen it. It will attract people. So that is very, very important.
Agree.
Awesome. Well, let's look at the example of a prime location. Tim just talked to us about all these great things. And here is one near a property that we are working on right now. And you can see accessibility. I-69 is right there. FM 1960 is right there. So those are freeways that people will take to get to work, to get to other places. And so that is very important. Then look at, some of the other drivers. There is the HCA Houston healthcare system. So people always want to know what's the closest hospital system to me if I were to need it. So that's important. You see restaurants, Payways is popular. You've got Papacitos, you've got, Cinnabon. So you've got some really good restaurants in this particular area. And then you've got your retailers, you've got your Barnes and Noble, you've got, typically Starbucks shows up everywhere. It's not, you can see it right there, kind of in the middle part of the graph or the map. And then you've got your groceries, HEB, you've got, the other restaurants, banks, et cetera, that are there. So this is an example of the kind of map we look at when we're saying, okay, are all those attributes that Tim just talked to us about, do they exist in a close proximity to the property? And that makes us feel better that, okay,
Right.
there's a lot of people in this area and there's lots of things to attract them to the area.
And also another thing to know, the schools, you can see the yellow, the school signs where the middle school, elementary school, and high school, relatively close to that property.
Right.
There's also the Kingwood Country Club, which is, recreational, like golf, right? A lot of people play golf. A lot of people love golf. So you can go, there's a lot of golf courses nearby. You can be going to the country club and play tennis or whatever sports you want to do, pickleball, that's the new rage.
Right. I played pickleball for the first time, like 3 weeks ago. 100 and something degree temperatures outside. I thought, okay,
But you still did
I
it.
could do this. It was fun, actually, but it's my
awesome.
first experience doing it. So, but that's the kind of thing people will look for. when they're looking for a place to live. So let's zoom in and talk about, give you some even better examples of some of the submarkets that we are currently looking at. So Tim, tell us about the Humble Kingwood Atascocita submarket, known as HKA, for those that are in the know. So tell us about this one.
Yeah, absolutely. And taking a step back real quick on the acquisition side, we are generally focusing on which submarkets we want to get into, or which, over time start having that blinking light that's like, okay, whoa, this is a great submarket. Let's try to figure out an opportunity here. So HKA is great because for all these reasons. So it's the third wealthiest zip code in the greater Houston area. Over 53% of the population earns over 100,000 per year. That's, again, phenomenal household income. There's been exceptional rent growth and historical occupancy. Population growth, 35% growth in the last 10 years.
And Tim, that doesn't surprise me because the data we pull on Houston, the Houston MSA, says that over 50% of the growth has been in these suburbs like Humboldt, Kingwood, Atascocita. So
that's right.
They're attracting a lot of folks. It gets you away from the big city and offers these great things.
Right. Good schools. And then the next one is pretty interesting. There's only, in this big submarket, there's only 340 units under construction right now. So that's amazing, right? That deliveries absorption. And of the new builds, 90% have been luxury Class A. So that means that these new builds, they're attracting the highest rents, going for the highest rents and the top of market rents. So what that does is, in a way, it just pushes more people to want to find opportunities that are maybe, less expensive than that Class A, which they tend to flock to the Class Bs that may offer the same, or a typical amenity package, such as like your upgraded counters and cabinets and etc.
And that's what we try to do, as you know, Tim, is when we look at renovating our Class B properties, we look at the amenities that the Class A builders are putting in, and we try to get as close to that as we can in our Class Bs so that we are attracting folks that maybe can't afford the luxury Class A rents that might be $700 to $1,000 more a month. But we want to be able to provide them as close to the amenities that they might get in a Class A. And I think over time, we've seen that when you have these Class A's come in, maybe not the first year or two, but over time, it kind of helps raise rents across the board in that particular area. So another thing we look for.
That's right. So yeah, this is Kingwood is known as the livable forest. I mean, which just has an abundance of green belts and parks and, like I said, golf and all those recreational activities that enhances the quality of life in this area. Another big quality of life enhancement is your access to commuting. We all know that's super important. Everyone here in Texas likes to drive and get in their cars. So having good access, FM 1960, 610, 69, Beltway 8, those are highways and freeways that can take you in and around Houston, which is super important. There's lots of jobs in this area, and more to come. Houston-based McCord Developments. There, if y'all haven't heard of it, Generation Park. It's 4,000-acre master plan park for industrial jobs and all sorts of diverse employment going to be just south of this region. So that's been a big park in Northeast Houston, which is, I think more employers are coming into that pocket in 2025 and beyond. So that's exciting.
It is exciting. I had a broker share with me one time that one industrial warehouse can generate, depending on the size of it, 200, 250 jobs. So we watch for these things because as they're building up these new employment centers in these industrial warehouses, we know that it will drive people to the area to work.
And so going back to that 340 units for, that's 1.3% of units being delivered compared to the existing stock of apartments in this submarket. So that's an incredible ratio. Anyway,
Yeah.
missed that part, but okay. This is one of the fastest growing areas in Houston MSA. Like Arlene said, a lot of the growth in Houston has been in the suburbs, and this is a prime or the prime example of that. In a report from CoStar said Q2 2024, the overall demand for housing in the Houston region has been the strongest in this submarket. So that's incredible. And again, another aspect of it is it has highly rated education systems such as Humboldt ISD, Lone Star College, and San Jacinto Junior College.
So Tim, thanks for sharing that. It does show me that you guys and gals are looking at the things that matter when we are shopping for new investment opportunities or properties in these particular areas, because Houston's massive, right? So you've got to zoom in into the areas that make the most sense and are going to produce some great renters and great properties. So thanks for sharing that. Now let's move on to Northwest Austin. Tim, tell us more about Northwest Austin. What's happening there?
Yeah, so Northwest Austin, again, it's a great submarket. It's northwest of downtown. It's that stat of the new deliveries. Right now, only 4.8% of units are under construction compared to the existing stock in that Northwest Austin submarket. And some submarkets in Austin, going back to, you got to dial in where this new deliveries are going. There are some submarkets southeast or east side, east of downtown, where there's 30-40% of deliveries. So while maybe the headlines seem scary, you got to really focus in on, okay, what is the submarket doing though? What is that area doing in terms of new units being delivered? And so only 4.8%, that's incredible.
That's pretty low.
That's not a lot of pressure from new units. So within a 3-mile radius, this 70% of the population holds a college degree or higher. So this is like a suburb area of Austin where people want to go out and find more space and the quality of life in this area. In this area, there's been exceptional rent growth and good occupancy. That's another item we'd like to see. Median home value is over 450,000. That's important because when in a way you're competing to where the nearby houses are doing in terms of like what they sell for, because a renter might one day want to move out and buy a house, but if the housing stock is extremely expensive in that area,
they'll remain renters for a longer period of time. And we also, I know you guys show me the studies that you do that compares even rentals, right? So what is a single family home in this neighborhood rent for versus a typical apartment rent? And usually there's a big gap. And so that means that we're probably going to have success in giving people more affordable options to rent. So.
Correct. Yep. And over 2.6 billion in transformative mixed use development. And that's everything from hospitals, offices, parks, businesses, new homes in this Northwest area. So this is a hot area due to the fact that there's that tech triangle, Apple, Dell, PayPal, eBay, Visa, IBM. This is where there's a density of high earning residents because of density of high paying jobs and like what you said, high tech in this area. And you can see a ton of population growth in the past 10 years with expectations for it to still grow in this area.
Yeah, 27% population growth. I mean, that is quite a bit.
Yeah, and that's the common theme between these two submarkets.
That's right.
Great growth and great jobs coming into this area. And then again, another one is the 183 Loop 1, right? 45, 35, right? So these are good highways that can take you in and out. And you know, when you think Northwest Austin, you're like, man, I might be far from all the action, but it's really 15 minutes to downtown. So that's pretty incredible. For those of us that know where a lot of the fun happens in Austin, it can
Yeah.
happen downtown. So that's good to know.
Yeah. Well, and you know, I want to remind everyone that we also will be answering questions, and we're basically at the end of the formal presentation, not really formal, but the data we had to share with you. So please drop any questions you might have into the chat so that Tim and I can answer them. And also want to share with you that we are working on some great opportunities in these two submarkets, which is why we've gathered all this data, because we studied it before we really looked at these two new opportunities. So if you are interested in these opportunities, or it's important that you join our investor network if you haven't already, so that we can establish a relationship with you and understand more about what you're looking for on your investment opportunities. So that is going to be dropped, if it hasn't already, into the chat on how you can join our investor network. So that is really what we have, other than taking any questions that you might have based on what we shared with you. So let's see if we've got any questions coming in. Let's see. Yes, we do. Awesome. Okay. Okay, Wesley, thank you. You're sharing that you're already involved with the 3 properties that we are working on as an investment opportunity right now, and you think the locations are dynamite.
I agree.
I agree. You know, that reminds me of one of those shows from the 80s. I'm dating myself, but JJ Walker used to say dynamite when something was really fantastic. So thank you, Wesley, for sharing that. We just dropped into the chat how you can join our investor network. That is where we will share our opportunities first, and they will go to folks that are in the investor network, and they'll have the first dibs at becoming part of these investment opportunities.
All right, looks like there's a question. What are your comments about growth, development, investments in New Braunfels? Great question. New Braunfels is, for those of you who do not know, it's just northeast of San Antonio along 35. So it's you know, it's a part of the greater San Antonio MSA. New Braunfels has seen a lot of growth and
a lot of development.
And a lot of development. That county has ranked just high for just relative growth. There's you know, lately the city has responded to all the new development in that area and in that submarket by drastically increasing the impact fees, meaning basically making it really expensive for developers to develop there. So it's going to be interesting to see what happens to new projects in that submarket, because the city is trying to counteract the rampant growth. And so, but other than that, it's a great submarket. The great taxing jurisdiction there still.
And Tim, it's probably what, 20 minutes from San Antonio, I guess that part of San Antonio. So we do find that people do commute into San Antonio from New Braunfels. So it is a sleepy suburb, not so sleepy anymore.
Right.
But you're right. I mean, the impact fees to developers are millions of dollars. So a developer is going to compare that, because you know they want to make sure that their development's pencil. And so if the impact fees are high and the city is saying we're slowing down, right? We're going to charge you so much, so you might not want to build here until maybe they level out, and they'll lower those again. We'll see.
Well, that just creates opportunities for the surrounding cities, and
That's right.
there's a lot of cities near and around New Braunfels. So
yeah, Sturt, Cibolo, I mean,
Converse.
those are Converse. Those are the areas that we're seeing a lot of growth in also.
Okay, so it looks like there's.
So Stephen is also asking, do you feel Texas is a better investment for multifamily, and why? Comes down to one thing: growth. You know, so if you look at the growth data from across the country, there are a lot of people moving into the state from California, from Chicago, and you know that is what's driving a lot of the development and a lot of the activity that's happening from a multifamily standpoint. Because if remember, we said 58% of the households in Houston rent and 55% in Austin. So as people move into Texas, a large percentage of them are going to rent. So Texas is expected to continue with growth. And so that's why we like Texas as an investment option. Any thoughts, Tim?
Yeah, and it goes down to also goes down to, some states are better landlord laws than others, and Texas is sure a good state for that. And there's just a diversity of employment, diversity in education, and there's just a ton of educational drivers here, keeping people here, a lot of jobs. People can move here, build a family, build a life, get a great education in the same city, and then get a great job in that city. So it's a magnet for a reason, because there's great education, great employment, and great housing. So once people get here, it's hard for them to leave, because it's and relatively good cost of living compared to a lot of cities on the West and East Coast, which is another important factor.
Yeah. And no state income tax. So
Right.
a lot of folks moving here, especially from California, to avoid those high taxes. So Texas is a big draw and will continue to be, which is why we think buying multifamily in Texas makes a lot of sense. So
Awesome. Looks like is there a twin property adjacent to the Meadows of Austin? If yes, is there any plan or desire to buy as well if opportunity comes in? I don't think necessarily that it's a twin property, but there are a couple properties nearby. If the time is right and the price is right, absolutely.
because it's a great submarket.
Yeah.
Right. I do know there's a property literally next door to Meadows of Austin, which is in the Northwest Austin submarket we just discussed. But it's a condo. It's a condo community, so those units are owned by the actual owner of each condo versus being rentals. But we will continue to look in this area, because once we identify a submarket we like, we continue marking those properties that come for sale in that area.
Awesome.
All right. Thank you, Bob, for your kind words about this being an excellent update. We like these huddles because it gives us a chance to continue to educate our investors and folks that are interested in multifamily. We believe an educated investor is a great investor, and so we will continue doing these as long as you guys want to come hear us. So thank you for joining us. Okay, there is a question about distributions. We really have not talked about any distributions or particular properties in this presentation, Tina, but I would recommend that you reach out to us at invest@reapequity.com, and we'll go over your important question with you one-on-one. So thank you for asking it. All right, let's see if we have anything else. Okay, Wesley, you have a good comment that you looked at other properties before investing or buying, and you've said no to some things. We actually did a huddle, a month ago?
Yeah.
About why we say no to property. So you might want to look for that one on our website. The recording is there. And your point that you're betting on the jockeys, not the horse, is an important one. And that's what I like to share with investors. And, I invest as a limited partner too. And it is important to bet on the sponsor or the jockey, the person that's really in charge of making the decisions on what happens with an investment. And it can make the biggest difference. Experience matters and experience counts. So definitely ask a lot of questions about the sponsors or anybody you're considering investing with. Ask them about their background. Ask them, we've been asked, can we do a background check on you? And I say, yes, the lender's done it on 33 loans. So they probably would have found something, but we're always happy to share that also and share our track record. That's an important one. Not just what have you bought, but have you bought, managed, and sold, and how did you do on those? That says a lot about your experience in the industry. So awesome. Well, I think we may have covered all the questions that have been asked. As always, reach out to us at invest@reapequity.com. And there it is, the Dead Deal Club we had on a huddle a month ago or so. You can find that information right there at our Reap Equity site under resources. So feel free to go there. We've got lots of great information there. And again, if you are interested in joining our investor network so you can hear about our opportunities that we are offering, please go to invest@reapequity.com. It's right there in the chat and join us. No obligation. We just will continue to share with you what we're working on. And again, thank you for joining us. Thank you, Tim,
thank
for
you.
pulling all that great
Thanks for having me.
information together. We've got a strong team of on the acquisition side that keeps churning through this data that we find to make sure that what we're putting in front of our investor group makes the most sense. So thank you for joining us. Have a great rest of your day, and we will see you again at next week's huddle in a month. Thank you.
Awesome. Thank you.